Hey, good afternoon, everyone. Greetings from Southern California. My name is Ken Shreve. Welcome to another edition of Breakout Investing on TFNN. How about this market? Lots to talk about today. Show with a lot of great content. If you want to give me a call, hey, it's a call-in talk show. Do that at 877-927-6648. 877-927-6648. My show airs every Tuesday and Thursday on TFNN from 3 to 4 p.m. Eastern. You can get it as a podcast on iTunes, and don't forget you can listen to all TFNN programming on your smartphone. All you need to do is just type in tfnn.mobi in your smartphone browser, and you can listen to the stream that way as well. I'll be going over charts on my program if you want to look at those charts right along with me. If you're on a PC, just go to tfnn.com, Tiger TV, right on the homepage there. The show is live on Channel 1. And again, you can look at charts as I talk about them, and the show is archived on Channel 13. And don't forget, you can also look at Tiger TV on your smartphone, with iPhone, Android device. You can watch Tiger TV right on your handheld device, so that's good too. All right, let's start by taking a look at the market. We've got a little more than 50 minutes left to go in Thursday's session. I'm going to update my chart of the NASDAQ composite here, and then I'll recapture that so you can see it in Tiger TV. Right now, the composite having a pretty solid day, up about 24 points, 0.8% to 29.90. Quite a bit of selling in the composite yesterday. But it stopped short of its 10-day moving average, and it is in rally mode again today, and pretty decent volume. Last time I checked, it was volume was above average yesterday on the NASDAQ at around just under 2.1 billion shares. Looks like we'll come in pretty close to that level today, maybe just a tad higher, maybe a tad lower, but tracking pretty close at this point. Let's move on and take a look at the S&P 500. S&P 500, see where that's at. That's not doing quite as well as the NASDAQ, but still having a solid day. The S&P 500 up a little more than 7.5 points, call it 0.6% to 1365. It's been riding its 10-day moving average higher for some time now. You know, I had some higher volume selling, not only in the NASDAQ yesterday, but also the S&P 500. And, you know, S&P 500 acting pretty well here. Now, you have to remember, since December 19th, and I've been mentioning this, but I'm going to continue to mention it, S&P 500 up about 14% since the low it hit on December 19th. It's only a 4% pullback that's going to take the S&P 500 down to its 50-day moving average, which is right around 1313, 1314. So, you know, there are a lot of bears out there, a lot of people that saw that sell-off in gold yesterday, a lot of people that saw the distribution in the major averages yesterday saying, okay, here comes the pullback. And here we are bouncing higher again. And, you know, I thought that there was a chance if we did rally today, there would not be a lot of juice behind the move, but volume does look to be okay today. On both exchanges, it looks like it's going to come in pretty close to what we saw on Wednesday. So NASDAQ, S&P 500 continue to show strength. But, you know, again, if we do see a pullback after a 14% move for the S&P 500, a 4% pullback to its 50-day moving average is certainly not out of the question. And, you know, I wouldn't be surprised to see that happen. Finally, let's just take a look at the Dow. Dow is underperforming today. It's only up about 22 points, call it 0.2% to 12,952, and that's it. All right, we got an early call from Sam in Philadelphia, Pennsylvania. Wants to talk. I think it's SNE. Is that right, Sam?
Yeah. How you doing, Ken?
Pretty good, buddy.
Yep. Sony, I got in around $18, and I'm thinking about a good stop around maybe 20.5, like the 50-day moving average.
Well, yeah, it looks like the 50-day is going to be a little bit lower than $20. I see the I'm looking at stockcharts.com on Tiger TV here. So I see Sony's 50-day moving average at right around 18 3/4, 1875 thereabouts.
Okay.
All right, so the 50-day line for Sony, and then Sony is a stock that has been showing quite a bit of relative price strength in the market. It's been on a nice uptrend. Got hit yesterday, but you've had a fair amount of volume behind up days over the past several weeks. I think a stop at the 50-day is pretty sound. You could do that at 18, maybe between 1850, 1875, something like that.
Okay.
All right.
Thank you very much.
Okay, Sam, take care.
Sure.
All right, Sam, with a question about Sony, SNE. Let's go back to the major averages real quick. Just went over the NASDAQ, S&P 500. I've been hearing a lot of talk about the Russell 2000. This is an index that I follow not that closely, but I know a lot of people do, and I think it is worthwhile to follow. But, what's interesting about the Russell 2000, the bears are saying, man, these small caps do not look good here. The Russell 2000 looks like it could be ready to roll over. I can't say I disagree with that. What you have is, the S&P 500, the NASDAQ, the Dow, acting pretty well. They're holding above support. Good amount of institutional buying in these indexes in recent weeks. Russell 2000, if you go back to its high of 833. That was set on February 3rd. And again, you can look at this right along with me in Tiger TV. But the 833 was set right here. And then it's been moving sideways for the past several days. And even though the volume isn't shown down here, I looked at a chart that did have volume. There's been quite a bit of distribution in the Russell 2000. There's no question about it. So you've got distribution. You've got several higher volume declines. Now some of those declines came, and the Russell closed up near its high for the day. So whether or not that was unequivocal institutional selling is debatable. But since February 3rd, there's no shortage of higher volume declines in the Russell 2000, which I think hurts its technical picture to some extent. Now the line in the sand for the Russell 2000 at this point is going to be 788. That's its 50-day moving average. The Russell right now looks like it's at around 814 thereabouts. So I agree that the Russell 2000 is by far the weakest acting stock index at this point. But am I going to make sell decisions in my model portfolio based on weakness in the Russell 2000? Absolutely not. I'm going to wait for bona fide signs of institutional selling in the S&P 500 and the NASDAQ. I think they're bigger indexes and they're more representative of the overall market. Now, headed into today, and if you caught Investors Business Daily's big picture column last night, you know that headed into today, there has been some distribution in the market, not a whole lot, but some that's worth paying attention to. The New York Stock Exchange Composite Index headed into today had 4 higher volume declines in recent weeks. Distribution a little less pronounced in the NASDAQ, I believe. What was it? I think 3 for the S&P 500 and 2 for the NASDAQ. I think I have that right. And again, yesterday there was volume in the market behind the decline. So it wasn't a great day for stocks yesterday, but I am impressed with the way the market has bounced nicely today. Let's take a look. U.S. dollar index. I don't have a chart for the dollar index, but at last check it was up 5 ticks to 78.79. So mostly unchanged. A little bit stronger for the dollar, which makes today's performance, which makes today's gains even more impressive. The dollar is holding on to all of its big gains from yesterday. But let's take a look at the UUP. This is an ETF, the Deutsche Bank U.S. dollar index bullish fund, and we'll see right now that the UUP is now down a penny, mostly unchanged, holding on to all of its gains. Let me pull up another chart here. Bear with me here. Yeah, let's pull up this one that shows the 200-day moving average, and you see a nice bounce yesterday off that 200-day line. Now, this is something I noted in Tuesday's show, that there was a possibility this could happen. Sure enough, yesterday you get a big bounce in the UUP and some pretty stiff selling in the major averages, but the UUP is holding on to all of its gains from yesterday. So we'll see if the dollar's going to continue to rally at this point. If it does, it could present some headwind for the major averages. Of course, the Dow, S&P, NASDAQ, they're typically going to do well, generally speaking, when the dollar's weak and dollar starts strengthening. That can fuel some selling in the major averages. A lot of talk about bonds yesterday, with gold selling off like it did, and Ben Bernanke's testimony, Humphrey Hawkins' testimony on Capitol Hill yesterday. Let's take a look at the TLT. Boy, this is I would just call this a really technically weak. I mean, this is an example of an ETF with weak technicals. The TLT is down another 1% today. Money coming out of bonds. The TLT is now trading at 116.15. I don't know. You may see some dead cat bounces here and there, but this looks like a short to me, plain and simple. Weak technicals, a lot of selling, not much conviction behind the buying for several weeks now. Very weak technical picture for the TLT. Taking a look at crude oil, up 1.7% today to 108.84 a barrel. And let's take a look at gold. After slumping 4.3% on Wednesday, April gold rallied $10.90, 0.6% to settle at $1,722.20 an ounce. Let's check in on the GLD. See how that's doing today. The GLD trades at 1/10 the price of an ounce of gold. GLD currently up 1.9% to 167.42, but you can see a huge percentage decline, a lot of liquidation in gold. I find gold to be almost impossible to play. I don't own gold stocks in my Ultimate Growth Stocks model portfolio. Having a good day of outperformance in the portfolio today, but I tend to avoid gold. I just find it difficult to play. It's really not my area of expertise either, so. And when I see wild price action in the GLD yesterday, it's just really tough to make any sort of technical interpretation on whether the GLD wants to head higher or lower from here. Yesterday was definitely bearish. You have a rally today. Looks like volume's going to be a lot lower than yesterday in the GLD. So I think the chart looks terrible, and gold is just not an area of the market where I play in my Ultimate Growth Stocks model portfolio. So didn't mention that you can get a 30-day. I've gone from 2 weeks to 4 weeks, basically, a 30-day free trial to Ultimate Growth Stocks. You can get that right on the homepage of TFNN.com. Just click on the Newsletters tab and then Investment Newsletters, and you'll get more information there. But it's a weekly newsletter. I buy growth stocks. I tend to move with the market. If I see signs of distribution, professional selling in the indexes after a significant rally, I will start moving to cash. Right now, I have 12, 13 stocks, something like that. I'm certainly not ready to take profits at this point. I'm seeing still a lot of good things happening in this market, and have a lot of big cushions where I can afford to, sit out some occasional selling if we see it in coming days. So have a lot of stocks performing well there, so check out Ultimate Growth Stocks right on the homepage of TFNN.com. Retail sales, earnings reports, discussion of a lot of other movers. We'll do that when we come back, folks.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while actually reducing your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns, making missed opportunities a thing of the past. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. A little bit of selling here with about 35 minutes left to go in Thursday's session. Dow has now turned fractionally lower to 12,951. NASDAQ still outperforming, up close to 17 points, 2983, and the S&P 500 still hanging in there, up close to 5 points to 1370, but indexes starting to move off their highs a little bit. It's going to be important to watch in coming days. Right now, if I take a step back, I can understand the bear case. I can understand the case for a pullback. No question, there are a lot of extended stocks out there. There are a lot of stocks that have been running higher since late December, since early November. The market has served up no shortage of technical breakouts in heavy volume, and that's what you want to see in the early stages of a rally. But the market is extended at this point, and we talked about the fact that wouldn't be surprised to see a pullback for the market here. If it happens, I'm not expecting a nowhere near a bear market taking shape here. This is just going to be a little bit of letting the excess being worked through. Maybe a correction of 3 to 5% in that area. What you should see is a lot of these big leaders like Apple, Intuitive Surgical. There's a whole bunch of them that could just pull back to a support level like the 20-day moving average, maybe the 50-day moving average, and it should give you another opportunity to get into these big leaders. But you certainly don't want to chase a name like Apple up here. Let's take a look at Apple while we're talking about the number of extended stocks out there. Apple is off its highs today, up 41 cents now to 542.85. The breakout point for Apple was all the way down here at 426. It broke out over 426 when it gapped up in what was that? January, when it reported those outstanding earnings. Had a big reversal here in February, very bearish day, but the stock quickly found its footing and continues to work its way higher. Very extended stock, not a stock that I'm interested in owning up here, but when the market does pull back, Apple is a good example of a name that's probably going to give you a new entry point, whether it pulls back to its 20-day around 500. 50-day is still pretty far out. It's about $455 a share. I'm not sure that Apple's going to get down that low. I think it's going to take some pretty negative headlines in the market, whether economic data in the U.S. all of a sudden starts to turn decidedly negative. Headlines out of Europe get really negative. I just don't see it happening. Not to say that we won't see a negative headline here or there, but I don't think it's going to be enough to really rattle this market. I think the market foundation is pretty strong right now, and we get a pullback, great, but I think it's going to be I don't think it's going to last very long. So does the risk outweigh the reward right now? One of the issues that I'm seeing in my growth screens, I really started putting money to work in my Ultimate Growth Stocks model portfolio back in December and January. That's when the portfolio started to take shape. I started moving away from cash, started getting invested. So right now when I look at my screens, I don't see a lot of actionable buy opportunities. I did add a stock yesterday, but by and large, most of my buys were done in late December, January, a few earlier this month. So I'm really not seeing a whole lot of stuff that I'm interested in buying right now. And when that happens, if my screens tell me to just be patient and not do anything, that's what I do. And so that's that. But like I said before we went into break, I'm also not ready to just run to the sidelines because of the distribution that we saw in the market yesterday. I've got some good gainers. I want to let my leaders run as much as possible. So I have a 20% gain in one stock. I'll let it come down 3-5%. Now, if I start to see meaningful signs of institutional selling and the stock starts to break through support, there I may trim or take full profits. But really not seeing anything in the way of meaningful sell signals in any of my holdings right now. So while I'm not actively putting money to work, I'm not selling either. Doing some sporadic selling, but by and large sitting tight with what I own. Let's take a look at shares of Ralph Lauren. I really like this chart. Last check, the stock was outperforming nicely today, up about 2.2%, $3.89 to $177.62. And I really like the tight sideways trading after its gap up right here. We can go just take a look at a weekly chart of Ralph Lauren and just flat out bullish technicals here. And I see a lot of charts like this, a lot of stocks that gapped up recently that have just moved sideways, held on to gains, showing very little in the way of sell signals. Ralph Lauren showing bullish action today after a big move. So like Ralph Lauren a lot here. When we come back, we'll take a look at some other names. Mindray Medical on my radar, specialty chemicals maker, and we'll also take a look at some economic data. We'll be right back, folks. Breakout Investing on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Hi folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. Ken Shreve with you. The number to use to get through is 877-927-6643. Yeah, so going through my screens right now, it's not real easy to find a lot of base breakouts. Base breakouts, again, started happening weeks ago. And that's typically when I buy a stock for my Ultimate Growth Stocks model portfolio. I like to buy stocks when they are coming out of, long consolidation periods. They were moving up in price, they moved sideways, took a breather, and then they were just prepping, taking a breather for another run. So I like to buy heavy volume breakouts, and that's actually a lot of my holdings that I currently have are in that group. But let's take a look at Mindray Medical, because even though base breakouts have been in very limited supply, you did have one recently in Mindray. This is a company based in China. Very strong balance sheet here. Excellent price performance. The stock is up $1.39 today, 4.5% to $32 a share. Again, based in China, the company is a medical device maker. They basically operate in 3 segments: patient monitoring and life support products, in vitro diagnostic products, and medical imaging systems. Recently reported very strong earnings. 44 cents a share, up 16% from a year ago. Sales growth pretty impressive, up 25% to $264 million. So this is a daily chart of Mindray Medical. You can see it broke out over a long handle area here. Let's take a look at the weekly, and you'll see the bigger base that it came out of. And this is Mindray Medical. Where are you? There you are. Weekly chart for Mindray, and you can see the base that started back early last year, call it around April, May, when the market started to come in, and then it came down, moved back up, started to retest this prior high, then it formed a little handle area, and now a breakout over its recent high of $30.33. So at $32 a share, I mean, you'd have to do the math to see if it's extended. Let me do it right now. I don't like to buy a stock when it moves more than 4 to 5% past a swing point. So at $32 a share, Mindray right now is about 5.5% past that swing point. So slightly extended here, but can't deny the fact that this is a stock under a pretty good amount of accumulation after a nice earnings report. Let's take a look at a specialty chemicals firm too, ALB, a company called Albemarle. I'm not sure if I have the pronunciation right there. Albemarle. It's a specialty chemicals company. I don't play in the chemical space that much, but this stock is outperforming again today, up $1.09, 1.6% to $67.61 a share. But you can see here, nice big uptrend between December up until the beginning of February, and then it started moving just sideways, holding on to its gains. Some heavy volume selling during this recent sideways movement, but notice that the stock is really not giving up much ground and also holding key support levels like the 20-day moving average. So wouldn't be surprised to see this one make a move either from here. The one flaw here is that on a weekly chart, and I don't have a weekly chart for ALB, but it did show a correction of about 47% on the left side of its base. Typically, when a stock pulls back, you like to see that correction in the 30%, 35% area. So Albemarle's recent correction was a bit steep, but still a stock showing relative price strength here. So it is worth noting, as are a lot of other chemicals names at this point. All right, let's take a look at some economic data today. Weekly jobless claims, another good reading here. They came in at 351,000, down slightly from an upwardly revised 353,000 the prior week. Really not seeing anything alarming at all in weekly jobless claims. In fact, they've been quite good. I think claims right now at 351,000 are the lowest since early 2008. So good reading there. Personal income and spending, a little disappointing. Estimates were for each to rise 0.4% in January. Personal income came in at 0.3%, up 0.3%, and personal spending up 0.2%. So a little bit below expectations, but market not overly concerned about that, especially in light of some really solid retail sales data. We'll get into that in just a little bit. Final piece of economic data today was the Institute for Supply Management Manufacturing Index. That was also slightly disappointing, but nothing alarming. It fell to 52.4 in February from 54.1 in January. Economists were expecting a small increase. Remember, yesterday the Chicago Purchasing Managers Index came in better than expected. So in terms of same-store sales, I mean, listen, same-store sales up 6.5%, overall up about 6.5% versus a year earlier. That was well above expectations. Excuse me, for a 3.5% gain. That's according to the consensus estimate at Retail Metrics. So usually when same-store sales come out month after month, you talk about it just being a mixed bag. You know, you got some good stories, you got some bad stories. But this time around, the news was mostly good. Let's take a look at shares of Gap. Big day of accumulation for this stock today, up about 7% to $25 a share. Gap's up in price. It is trading near its session low. It hit an intraday high of 26, but right now at $25 a share. Its intraday low is $24.86. So strong performance for the stock today, even though there have been some sellers in there lately. And let's take a look. I want to take a look at a monthly chart for Gap. I use monthly charts, dailies, weeklies, and monthlies. I probably use weeklies the most, but sometimes I'll go to a monthly just to see if a stock could be in the early stages of sort of a long-term breakout. And believe it or not, this could be the case with Gap. Let's take a look at a monthly of Gap, and you can see the high it made in late 2009, early 2010. You see a nice little base forming here. Again, trading near its session low today, but wouldn't be surprised to see this one over time. You might see a little shakeout before a big breakout, but if the market continues to act like I think it will, for 2011, I'm expecting a good year for stocks. May not be too late with Gap, especially in light of this same-store sales number today. Anyway, the same-store sales were up 4%. Estimate was for a gain of 1.4%. Another strong month of sales for limited brands. Check in on LTD. This is a stock. You can see it touched its 20-day moving average today at 45.38. It is lower by 27 cents right now to 46.26, but a strong price performer. Of course, Limited owns not only Victoria's Secret but also Bath and Body Works. Sales there for the month up 8% versus expectations of a 6.9% gain, and a whole lot of other positive stories. Target beat expectations. Nordstrom, JWN, almost double expectations. Same-store sales up 10.2% there. TJX, Ross stores, these discount retailers continue to deliver the goods. Both of these stocks are very extended, though. Let's take a look at TJX. I mean, obviously a very high-quality retailer, but, you hear me talk a lot about extended stocks, especially since the NASDAQ is now up about 19% since December 19th. A lot of stocks just running higher. You just don't want to buy them up here. Much better to wait for a new base to form. Not only applies to TJX companies, but also to ROST, Ross stores. The breakouts in these stocks, you have to remember, we're back in October, November of last year. So TJX and Ross, both very extended. And the two more bright spots in retail, and we'll stop talking about retail, would be Buckle, BKE, same-store sales there, up 14.8%. So nice numbers at Buckle. Good gap up for this stock. Shares were recently trading around 48.05. Good for a 7% gain. And let's check in on Zoomies as well. Zoomies, ZUMZ on the NASDAQ. This is another stock that's well off its highs for the day, but still it gapped up, recently trading around 32.48, up about 3.4%. So, a lot of people, when they buy retail stocks, they, like to look at the large cap liquid names, whether it's a Walmart or Target, and sometimes they can be perfectly good investments. But one of the things in my Ultimate Growth Stocks model portfolio, I tend to look at newer, younger companies that are still in the early stages of growth. So I'm not afraid to look at names that may not be familiar names in retail. I would certainly put Buckle in there, BKE, Zoomies. These are just retailers that you probably haven't heard of. But there's a lot of great growth stories in retail. You wouldn't know it by listening to the media sometimes, but a lot of great growth stories still going on. A lot of retailers out there, specialty retailers in particular. It's not an easy group to play. It can be volatile, but if you're looking at companies that are consistently delivering big earnings and sales growth in recent quarters, they're showing good signs of increasing mutual fund ownership. They have high return on equity, and fundamentals and technicals look good. I mean, that's typically going to be a good buying opportunity at some point. We took a look at Apple. Let's take a look at Apple again. I know we checked on it earlier in the show, but they have a big event next week. shares of Apple right now up 0.2% today to 543.61. March 7th, they're most likely going to be releasing the third generation iPad that's probably going to have a faster chip, better resolution. May see Siri, the voice recognition technology on the iPad 3. So we'll see, but a lot of buzz about that. Interesting that Apple's market cap right now around 506, 507 billion. I heard somewhere yesterday, may have been on CNBC, but that Apple's market cap of $507 billion is now more than Microsoft and IBM combined, which really puts things in perspective. That's pretty incredible. Apple's market cap of $507 billion is larger than Microsoft and IBM combined. And shares of Microsoft, again, talking about so many stocks out there acting well. I mean, you got Dow components like Microsoft. Let's take a look at Microsoft today. I mean, do you see any sell signals in this chart? I see an extended stock that's probably, poised for a pullback at some point. But, again, I think a pullback here is probably going to be an opportunity to add to the position. If it's a pullback in very, very heavy volume and it starts to break through support levels, in other words, it doesn't find support, I'm not going to be looking to buy a stock or add to a stock that's doing that. But a lot of these big leaders, I think, are going to pull back eventually, and because the market foundation is solid enough, I would expect a name like Microsoft to find support. Microsoft up 1.5% today to 32.22. Starting to get a look at Microsoft's new operating system, Windows 8. It's going to be released commercially this fall, but it looks pretty interesting. Looks like a pretty good update. And also in the Dow, let's take a look at Intel, another stock that's just not doing anything wrong, frankly. Shares of Intel right now down 4 cents to 26.84. Looks like it could be ready to base here. 50-day moving average for Intel down at 25.82, which is only a buck below where it's trading now. So I'd let Intel base for a little while, see what this market is going to do. But I would expect this is another name that could find support if and when it does pull back in price. All right, not much in the way of earnings reports today, but let's take a look at PetSmart. PetSmart underperforming today after the company, I didn't think the earnings report was that bad, but pretty wild day of trading. Look at this. It hit an intraday low of 53.30. It's now trading at 55.33, only down 41 cents. So a lot of buyers came in, and again, look at the PetSmart came all the way down to its 50-day moving average at 53.32. That was pretty much its low for the day. Now it's all the way up at its session high. So selling pressure in the stock early. Buyers come in and support a strong name like this. The numbers weren't bad at all at PetSmart. Earnings up 18% from a year ago to 91 cents a share. Sales up 8% to $1.6 billion. Last check, I think the company was planning on opening 40 to 45 more new stores in 2012. They currently have about 1,200. But one of my favorite places to shop, and a very well-run company here. So PetSmart rallying back nicely after early weakness. And let's take a look at Kroger. Again, not a stock typical of a stock that I would target for my Ultimate Growth Stocks model portfolio. Usually like to see much stronger growth, bottom line, top line growth of 30, 40, 50% in recent quarters. But Kroger having a good day today. It gapped up in price. Shares trading right now at $24.43, up about 2.7%. Kroger, some of its regional chains include Food for Less and Fred Meyer, but earnings up 9% to 50 cents a share. Sales up 8% to $21.4 billion. Same-store sales up an impressive 4.9% in the quarter. All right, headed into the last break on this Thursday edition of Breakout Investing. We'll come back and take a look at a few more growth names on my radar. We'll do that when we come back. Breakout Investing on TFNN.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing as we head into the close here on Tiger TV. Let me pull up a chart of the NASDAQ composite, see where we're at as we head into the close here. Here we go, NASDAQ composite. Had a little selling in the market about a half an hour ago. It looks like, we've rebounded. But I'm going to wonder, let's see if StockCharts.com cooperates with me here. All right. NASDAQ Composite right now up 24 points, back up near its session high, 0.8% to 2990. And let's see if the S&P 500 is going to come up nice and quickly for me. Take a look at the S&P 500, and yeah, the internet's kind of slowing down here a little bit, so we'll wait for that to come up. But I did want to take a look at Lululemon. Before we went into break, I was talking about good growth stories in retail, and Lululemon is a stock that I currently own in my Ultimate Growth Stocks model portfolio. Shares of Lulu having a pretty big day today, and let me just see if I can pull up Lulu in my charting service here. Okay, now we seem to be back in gear. Shares of Lululemon up 5.7% today to $70.84. So strong performer. Lulu still hasn't reported earnings yet. This is an interesting thing about this market, that we still have a lot of retail earnings reports coming up next week, the following week. So Lululemon hasn't announced an earnings date yet, but it should be in mid-March, in a couple of weeks. Earnings expected to be up 53% from a year ago to 49 cents a share. Sales up 48% to $362.2 million. Now, with growth names, if I own a growth stock and it's a relatively new holding and I don't have a big cushion in the stock ahead of earnings, knowing that growth stocks can move sharply one way or another depending on how the market interprets the report, if I don't have a big cushion in a growth stock, I will usually trim my position, lower my exposure, just to account for a possible miss or a disappointing report. So I have a pretty good cushion in Lulu at this point, but I am expecting a strong quarter from this company when it reports in a couple of weeks. So shares of Lululemon outperforming today. Let's also take a look at Polaris Industries, PII. This is a stock that at one point I really wasn't that keen on, and then they reported earnings. Earnings were pretty good. This is an interesting chart out here. Could see Polaris go for a breakout in the not-too-distant future. Stock is up 4.3% today to $68.88. Couldn't find any news, but Polaris is a company that makes all-terrain, recreational, and utility vehicles, snowmobiles, these types of things, and it's a good company with a good chart and good fundamentals. So anytime you have a stock with good fundamentals showing good growth, bullish stock chart, it's definitely one worth paying attention to. I have a weekly chart for Polaris here. Let's pull that up as we wind down the show today. Polaris Industries. Here's a weekly look here, and what you have is a potential breakout from what looks to me like a base on base pattern. You have a base forming here, a second base forming here, and you could see a breakout shortly. So watching Polaris Industries closely, and in the retail sector, also taking a look at Body Central ahead of its earnings report next week. Let's take a look at a chart of Body Central. It is outperforming nicely today, up 3.8% to $28.90. Dick's Sporting Goods also set to report earnings next week, March 6th, before the open. Thanks very much for tuning in, folks. Always a pleasure. Coming up next, the Tom O'Brien Show on TFNN from 4 to 6 p.m. Eastern. I'll be back on Tuesday. Have a great afternoon.